Wall Street is experiencing its biggest transformation since the rise of the internet, and this time the driving force is artificial intelligence. What began as a technology used by a few Silicon Valley startups has now become the core engine behind trading systems, risk management, fraud detection, customer analytics, and even corporate decision-making at the highest level. Every major investment bank, hedge fund, and asset manager is racing to integrate AI into their operations because in today's market, speed, data, and prediction accuracy decide who wins and who falls behind. Artificial intelligence is changing how money moves. Advanced algorithms can now scan millions of financial records, earnings reports, news headlines, and economic indicators in real time. They identify patterns that human analysts could never process at such speed. This allows firms to anticipate market shifts, manage risk more efficiently, and execute trades within microseconds. As a result, capital is flowing toward companies that build the infrastructure powering this AI revolution. At the foundation of this entire system are the chipmakers and cloud giants. AI requires enormous computing power, and companies that design high-performance processors and operate massive data centers are becoming the backbone of modern finance. These firms are not just technology providers, they are the digital highways on which the future of Wall Street runs. As long as AI adoption continues to expand across industries, demand for advanced semiconductors and cloud services is expected to grow steadily, creating long-term revenue streams and strong competitive advantages. Above the hardware layer sits the software ecosystem. Enterprise AI platforms are now being adopted by banks, insurance companies, healthcare providers, and global corporations to automate operations, detect fraud, personalize customer experiences, and optimize supply chains. These systems improve efficiency, reduce costs, and increase profit margins. Over time, companies that control these platforms build deep relationships with clients, creating recurring revenue and long-term stability, which are key drivers of sustained stock market performance. At the same time, a new generation of pure AI companies is emerging. These firms focus on specialized applications such as financial modeling, cybersecurity, robotics, medical diagnostics, and autonomous systems. Some of them will become future market leaders, delivering extraordinary growth for early investors. However, this segment also carries higher risk. Competition is intense, technology evolves rapidly, and not every innovator will survive. The gap between winners and losers in this space will likely be dramatic. Every technological revolution creates a disruption, and the AI era is no exception. Companies that fail to modernize their operations, rely on outdated systems, or resist automation may find it increasingly difficult to compete. Traditional business models built on manual processes and slow data analysis are being challenged by faster, smarter, and more efficient AI-driven competitors. Over the long run, these lagging firms could lose market share, profitability, and investor confidence. For long-term investors, the key is not chasing hype, but identifying sustainable advantage. Strong balance sheets, real AI integration, scalable platforms, and a leadership in critical infrastructure are the qualities that tend to define long-term winners. Many portfolio managers are now diversifying their exposure across the AI ecosystem, from chips and cloud computing to enterprise software and data analytics, rather than betting on a single company or trend. Looking ahead, artificial intelligence is not a short-term cycle. It is a structural transformation similar to electricity, automobiles, or the internet. Over the next decade and beyond, AI will reshape productivity, corporate earnings, and global economic growth. The companies that successfully adapt and lead in this new era could dominate financial markets for years to come, while those that fail to evolve may slowly fade from relevance. The AI revolution is already reshaping Wall Street, and for investors, the most important decision is whether their capital is positioned on the side of the long-term winners.